On the EURUSD, we have a simple setup we can play around with going into the new week. The first thing I did was to go to the weekly time frame so that I can see what is actually happening in this market since it's been a while since we took a trade on this pair. So now on the weekly time frame, the first thing I observe is that even though we are on a bearish momentum, as we can see, we only had lower highs since 2015. As you can see, price found lower highs at this point. But something very significant caught my attention, and that is that price has been respecting this demand zone since 2015. And if we look at what is happening recently, price has just rejected that same level, making this area a potential valid demand zone going into the new week. So, for the sake of clarity, I would like to label this. So we have it right inside at that area. So we have a strong demand zone right around 1.0500 going into the new week. So this is my first observation on the weekly time frame. So with this observation, we need to move down to the daily time frame. And but before I do that, let's zoom in too closely what's happening in the last 2 to 3 weeks on this one. We can see that in the last two weeks we had bullish engulfing candle, giving us a sense that euro is gaining traction against the dollar in the last couple of weeks. However, we can't just jump into conclusion that we will be going into um, a bullish potential in the new week without taking into consideration other parameters on this. So scaling down to the daily time frame, the first thing we'll observe is that price has been on its bearish momentum. If we zoom into what has been happening since the month of February, we'll notice that price has been on a bearish momentum. And to make that clear enough, we have connected the series of lower highs to give out our bearish trend line at this point. So looking closely into what has been happening in the last 3 to 4 months, we saw that price has been respecting this bearish trend line, after which we saw a significant breakdown of the skill level identified here during the course of April, and we saw price go far down until it got into 1.03 500, after which started seeing we saw a higher high, and we could probably be seeing a trend continuation in the form of a breakout of that bearish trend line in the new week. And the other scenario is that we could be seeing, considering the long-term bearish momentum, we could be seeing price do a rejection of this trend line or the key level to send price going further down. So now going into the new week, the first thing we need to do is to look for structures that will guide our actions going forward. So what I did was to identify a key level, which I found to be around 1.08. So key level at $1.08. So we should put that right at the top. I think at the center will be fine, or let's put it on the right hand side, and then we'll give me a moment, please. So we have our key level right at $1.08 thousand. So now the next thing I observed was the breakdown of that key level mid-April of this year. We saw the breakdown of that key level around here, a breakdown and retest of that key level, giving us a sense into the strength of the sellers at this point in time. So now that we have a breakdown of that structure, price appears to be doing a correction phase since it hit 1.03 500, and price is right back at that key level during the course of last week's trading session. Now, what we don't know is this. There are two scenarios that could probably happen going into the new week. The first one is that price could probably reject the trend line or that key level, where we look for structures that support a trend continuation to the downside and join that decline. However, the other scenario is there is a possibility that price could break above that key level, which also shares a confluence with that bearish trend line, after which we see a rejection of both the key level and the trend line, and look for structures, patterns that support the trend continuation to the upside. So this is the simple setup I have identified here on the Euro USD. So now what we want to be doing is this. If we are going to be buying, we are going to be using that key level to be our yardstick. So if we are going to be buying the euro, definitely we want to be doing any buying right above that key level. And if we are going to be selling the euro, we want to be doing it right below the key level going into the new week. So how do we take advantage of that bullish momentum or the bearish momentum if it finally happens? So one thing first I want to be doing is to identify an entry zone right above that key level. And this entry zone will only mature if we have a breakout of both the trend line and the key level. And if we see a retest of structure, then we look for patterns that support a trend continuation to the upside. So if that finally happens, then where will our take profit be if we are going to buy the euro? So right above key level, we should have our stop loss right below structure, which is around 60 pips thereabout. Then we have a take profit. For the meantime, let us use, if we look left, we can see that we have structures around this area that we can use to guide our TP target going into the new week. And considering that we should be having somewhere around 1.1 area or 1.112. I think 1.112 will be most appropriate at this area. So this gives us around 300 pips in potential targets. However, if price continues to respect that bearish trend line, then definitely we want to be having our entry right below that key level, which also shares a confluence below that bearish trend line. So what this simply means is that we want to be taking advantage of any short position right below that key level, and that is only after a confirmation has been made. And what do I mean by a confirmation? We want to see a rejection of this key level or trend line, after which we look for structures, probably a reversal pattern that supports a trend continuation to the downside. So if we have right below that key level as our entry point, and definitely our stop loss will be right above that key level for the meantime, after which we look at take profit target around this area. For me personally, considering that we are in a strong demand zone, and we can see that since 2015, buyers has continued to respect that demand zone. So we will not want to go thus too far from the previous support level, which is around this area, because from this area, sorry, give me a moment, please. From this area, we could probably see price do a rejection of this area to incite that bullish momentum, considering that strong demand zone. So with this bearish momentum, we will be looking at around 280 pips take potential take profit target going into the new week. Please note that the beginning of the new week could probably give us some signs that will guide our actions into the new week. If we see a breakout of structure, we want to take advantage at a retest. And then if we see a rejection of the key level and trend line, then we want to take advantage of a bearish momentum. Please note that regular updates will always be shared in the comment section of my TradingView account for reference purposes. So on this regard, I would like to pause the video and let us see how price action plays out during the early hours of the new week. Thank you for watching and do have a wonderful